Hello guys, Billy FS here, and in this video we are going to talk about support and resistance and how to actually do a top-down analysis with it, right? So don't forget to like and subscribe if you haven't done so to help us grow the channel, and if you have any questions you can leave them in the comment section and I'll come and attend to you. So let's get into it. Now, to do a top-down analysis of support and resistance, you have to be on a higher time frame. If you're a scalper, maybe your higher time frame is going to be the 50 minutes time frame. But if you're a day trader like me, then you're going to start from the 4-hour time frame or the daily time frame, depending on what the market is doing at the moment. So now that you're on the daily time frame, what do? When you want to analyze your support and resistance, you have to focus on where the market is trading hot currently. Because when you look at the bottom over here, we are going to see a lot of support areas, but that is a little bit interesting. Let me say uninteresting because the market is not currently trading around that area. So focus on where the market is currently trading. So based on just inspection, I can see that the price action is currently here. So this area is where I can choose to find my area of what support and resistance. And if you want to find an area of resistance, it's just an area where the market has touched multiple times. The same thing applies to the area of what support, right? So let's say that the market is trending up. It does something like this. It goes up, make another higher high, comes back and what retest this area. Now this area that has been retest becomes an area of what support, right? Sometimes people will just say, okay, the market has broken this higher high, now it's coming for a retest at a higher high and a continuation. Well, that works, right? Sometimes, but most of the time you're going to be stopped out because support and resistance is much more, strong when the market has given you at least two touches, right? At least two touches. That is when the zone is strong or the level is extremely sensitive and what interesting. And that is when most liquidity is what swept because it is said that the level is going to hold, is going to what be broken, right? So you have to wait to see the area where the market has given multiple touches and you use that area to be what your interesting zone or area of support and what resistance. So this is in a bullish trend. So let's look at a bearish trend. Let's say that in this case we don't have the market giving us a beautiful trend like that, but you have a low or something like this. Then you have the market test it, then it breaks, right? So you can see that here we have this test, we have this test. So when the market comes here, we can assume that this is an interesting level. Then you can wait for the market to test it again and what move up. So in this case, this area becomes an area of support still, right? Support. So you can see a reaction, a reaction, a reaction. So you miss the level what's interesting. A lot of people are looking at the level. Liquidity can be stretched from the level, or the level can hold perfectly, and the market can what can move up, right? With issues of liquidity, I can show you that, but maybe in another video. So in this video, let's just focus on what support and resistance aspect of what of the strategy. Now, on the daily time frame, what you want is to see where the market is currently what trading. Okay, so let's see where the market is currently trading. So you can see around this area, the market has reacted here, reacted here. So at least we have what two reactions. So you mark that area as our area of what resistance. So when the market comes to that level again, we can anticipate some kind of what reaction. It doesn't have to be perfect, right? It just has to have touches, right? The market touches it, reverses, touches it, reverses. That is the most interesting thing that they want to see. It doesn't have to be what? Have to be perfect. Because people try to force it to be, exactly at a wick, like here. And if it is not like that, they feel like what they are doing is what wrong. It doesn't have to be perfect. Okay. So now that we have the two touches, that is the area of resistance on the daily time frame, you jump down to the what? To the lower time frame, right? You don't go directly to the 30 minutes time frame, for instance. You have to, be stepping down quietly, like maybe from the 4-hour time frame, the 2-hour time frame, to the 1-hour time frame, to the 30-minute time frame. In that order, so that you don't miss anything. And you also have to take into consideration the market structure because if this is an area of resistance and you are anticipating to sell the market over here, but price is still building up like this on the lower time frame, then you are setting a dead trap for yourself unless you wait for the market to what break the most recent lows that it is was printing, then you wait for a retest into that resistance, then you can sell. I hope that is easy. So now let's move on to the 4-hour time frame. And the 4-hour time frame, what do we see? The 4-hour time frame, it is extremely what simple. The market is still what giving us this bullish structure that is sitting right here that we have to wait for, right? So if you want to sell, it is not a good idea to sell right now. And if you want to buy, it is not a good idea to what to buy right now because we are almost at a resistance, right? You can take a scalp, but that is not going to give you anything. So we just have to wait for the market to shade bearish or break above this area of what resistance, wait for a retest and what a continuation. You can see this bullish structure that is being formed over here on the 4-hour time frame, right? If you can't see it very well, you just jump down to the what? To the 30 minutes time frame or the 1 hour time frame to get more details over here, right? So apart from the market structure that is being formed, we can also see something very important. That is the area of resistance and support on a 4-hour time frame, right? I can see that the market reacted over here, then it is around that area. Okay. So let me go to the 2-hour time frame so that I can see it clearly. Reaction, reaction, right? Reacted around this zone, reacted around this zone, and around this zone too, we got what? We got another reaction. So you can see below the daily support or the daily resistance that we have what we have marked, we have this 4-hour level that is sitting right here. So just mark the level, just mark the level. That is a level, an interesting level because the market has reacted multiple times to it. So, right, we just mark it. Now, like I said, it shouldn't be perfect, right? So you can even adjust it to what towards this level that is sitting right here so that it becomes 1, 2, 3. Okay, it doesn't have to be perfect. It just has to have what multiple touches, places where the market go to and what reacted aggressively. That is what you are interested in, right? So now you can see that the market is at that resistance level. So at least you can anticipate, not expect, anticipate, right? Some sells over here, maybe to the downside, okay? Something like this. And maybe back here because the market is already consolidating. It got to the resistance, it reacted. Now it came for support over here. Now it went back to the resistance, reacted. Now it's back at the same what area again, right? So maybe you can anticipate a little bit of what reaction, but it's not a good idea to what sell right now. You have to pay attention to the market structure. Okay, you have to pay attention to the market structure. You just have to look at the leg that is, heading towards the what the resistance. This leg that is heading towards the resistance, and you have to see the market structure within that leg. That leg has not filled. You have no business what selling. If you sell, you are going to be stopped out. Literally, you are going to be what stopped out because you don't know whether this area is going to hold and the market is going to break it, retest it, and go for the daily resistance what up here. So let's move on to the top 30 minutes time frame to see the market structure that is what boarding here or the 1 hour time frame. Okay, 30 minutes time frame will be better. All right. So now we see, okay, we see the market doing something. Made a high, made a low. Now it made what a higher high. Okay, so you can make a higher low and continue making what a higher high. So if you want to short the market from here, you have no business doing it around that level. Wait for this low that has been what that has been traded, that has been printed over here to be broken. Right. So something like this, then you wait for a retest because I can see an area over here. You can see this market reacting over here, then I can see the market reacting here over here again. So that becomes an interesting level. So you wait for the market to retest that interesting level and what drop back to the overall area of what support on the 4-hour time frame. So something like this. Okay. Or another thing that can happen is that the market is going to trade up, come back like this, and try to trade up, but forms what a double top over here. At that point, you can short the market because double tops are mostly the market going to reverse. Sometimes it can be used as liquidity, but if you know what you are doing and you know that the market can reverse from there, you can what take a shot from there towards that area. So that is basically it, guys. Don't complicate anything. Just wait for the market to get to an area of support and resistance on the higher time frame. Go to the lower time frame, wait for the market structure that is building towards that area of support and resistance to be changed or to be broken, right? Then you can take a trade, maybe a short trade or a long trade based on how you analyze the market, right? So that is basically it. You don't have to complicate anything. There's no rocket science, there's no quantum mechanics, quantum physics, or engineering mathematics over here. This is just pure logic and pure price action. Okay, wait for the market to get to an area of support and resistance. Go to the lower time frame. Wait for the market structure building towards that area to be what to be broken. Then take the opposite what the opposite direction. That is basically what if, right? That is basically if. And when you are looking at the market structure, please use a time frame that shows you a very clear market structure. Because if you want to see the market structure that is building around that area, I am on the 30 minutes time frame, and you go to the, let's say, the daily time frame, you will not see anything over here. It's just a single candle in the daily time frame. But on the 30 minutes time frame, you see the highs and what the lows clearly, and that is what you want to focus on, or that is where you want to be in order to be able to analyze the market better, right? That is going to be that for this video. I believe you derived value from it. If you have any questions, once again, leave them in the comment section, and don't forget to once again like and subscribe to help us grow the channel for more nice content like this. All right, Billy FS out.